Hey guys, welcome back. In today's video, we are talking about the AMC special event, the shorts collapsing, working out the true value, and many more in this video. First, we're taking a look at this. Breaking, AMC Theaters partners with Netflix to premiere Stranger Things series finale across 200 US locations on New Year's Eve and New Year's Day. So this is the latest collaboration we have between AMC and Netflix. Now, the reason why this is important is because of what it means. Firstly, Adam Aaron talked about this as well. In our new cooperation with Netflix, AMC is delighted to be showing quite the special event at 200 of our US theaters, where tickets are free when you also purchase a $20 per guest food and beverage voucher good on the day of show. So firstly, if anyone is interested, of course, go check it out, watch it at AMC. But the reason why I find this extremely important and the impact it has is because previously we have seen so many analysts, we have seen so many of these hedge fund guys come out to say how AMC is lagging behind, how Netflix is going to completely replace AMC, yet Netflix is still willing to collaborate with AMC. And it really just shows that there is a demand for US theaters and they understand the premium experience that guests can get, that these viewers can get at watching these things in US theaters. Now, I think one of the biggest things it has done, and the reason why it caused this, is because of all of these anime movies that has come out and that has done exceptionally well in movies. And so Netflix are obviously realizing this and capturing on this opportunity. And so for me, this isn't a matter of AMC is in need of Netflix, but rather Netflix needs AMC. And now that says a lot about the future of us, because remember, this isn't the only thing that's keeping AMC going. We have our original businesses. The fact that these streaming platforms are now willing to collaborate with us and wanting to collaborate with us should show you how much more potential there is. And for the ones who said that they are long Netflix and short AMC because AMC is going to get replaced because these streaming platforms are the future, well, they can obviously think again when the fact that these streaming platforms are wanting to work with AMC. The demand is there. And I think that's very important to realize. And it just shows another case of how AMC is increasing their revenue, but how AMC is showing that the demand for theaters is still there. And I think that this is obviously very good fundamentals. Now, AMC price isn't telling the story, it's hiding the story. Packed theaters, better earnings, debt coming down, yet the charts act like the company is collapsing. That's not natural price action, that's a system trying to cover its own tracks. Retail noticed years ago, and we're still watching every move. So we've already talked about this. When you take a look at all of the things that's going on for AMC, the fact that we are down 2.13%, we were down 4.08% yesterday on a Monday, despite the good news that we've gotten over the weekend, should tell you that it's because the short sellers are wanting to hide something, especially when you have, so in 2 weeks, AMC got higher volume, all-time low price, short interest reported down, FTDs at 0. My belief is something is being hidden, cleaned, and or moved around. Maybe synthetic longs are being closed, possible as well. Any thoughts on this share away? So firstly, we have to realize is that last week when we saw AMC going up, they tried to cover it up by saying that it was due to news such as the popcorn pass, and that it was because of also record attendance because we had over 5 million coming in for AMC. Now, this week, we actually broke that record again, yet we saw the price going down. So firstly, you can already know that these articles that claims AMC is going up because of certain news are clearly here to misdirect you on what to actually think, what to actually see for AMC, because that is not the case. Every time we see AMC go up, it's because there's a weakness within the algorithms. There's a weakness in the collaterals for the short sellers. However, because they don't want people to know, they class it off as AMC receiving good news. Now, the reason why it doesn't work, the reason why we're able to see this is because then when AMC does happen to get good news, then we should be seeing the price of AMC go up, but in fact, we actually see it go below. And so that is clearly something that's already going on. Now, take a look at here. Currently, AMC has over 83% of all volumes in the dark pool. So you should already see how ridiculous this is. This is not even before the market is ending. This is during the market. So it's still, this was during market hour trading. And this is already what we're seeing. So you have to realize that during the most volatile times for AMC, during the majority of shares are being hidden away. And so this is why we've said earlier with how the price isn't telling the story, it's hiding the story. Because if we did want to see what actually is going on with AMC, we shouldn't be looking at an 83% dark pool. I'm sure by now all of you should realize this, about what's going on, but this is just to clarify and really will link it all together between these news that they're trying to say of AMC and the dark pool manipulation. We know what's actually happening. And you can see over the past 5 years, brokerages have been showing 80% plus of the daily transaction volume being buy orders on AMC stock. Over the past 5 years, 80% of the daily transaction volume has been routed by the market makers, Citadel Securities and Virtue Financial off exchange, so 80% of orders do not impact supply and demand and therefore have no impact on price for AMC stock. Coincidence? I think not. Market manipulation? Yes. And we've already talked about the internalization of orders within these funds, and we've known is that that's a big reason for why we don't actually see the price of AMC moving. Like we've said, if last week AMC went up because of the fact they saw a massive audience, and this week we saw the same news but better, then by that logic we should also be seeing AMC go up. The very fact we don't should already tell you the manipulation that it's going on. But another thing that's interesting is because we've seen the amount of buy orders that happen for AMC. Now, a big reason for why it doesn't affect the actual price is already because of the dark pool. But yesterday, we showed a very interesting piece of data that Robinhood released, which is saying that retail are selling despite good news. So we've already talked about how ridiculous that is, but now you can pull it all together once again. We're seeing 80% of the orders being buy orders for AMC, and yet we're seeing retail selling their shares apparently. So clearly that's already ridiculous. Secondly is the fact that we've seen bad news on AMC. At least the bad news is what these articles claim. We know what's actually happening. But they're saying that all of these articles that have released bad news, yet apes were buying. And now, the moment these articles are releasing good news, apes are selling. And we've already said this. Why would apes buy AMC for 5 years straight on these supposed bad news? And the moment we get good news, we decide to sell. That's also ridiculous. And this is what we've said with how these articles, their aim isn't to give you the most detailed financial analysis within the market, but rather they're trying to give you an incentive to sell. They're here to help out their fellow short sellers to get rid of the retail investors, because they fail to mention is that institutional ownership has been going up for AMC. So all of these times that they've been screaming for people to sell, for people to leave AMC, they're failing to mention that institutions have been buying at every opportunity possible. And you can see here, first image, no failure to deliver reported despite heavy off-exchange volume and price drop. Sold shares have located. Second image, first half of November, AMC dropped in price from upper to lower twos. Third image, reported short interest drops despite price drop with buying. Look, if we're supposed to believe the data, ask yourself how and where did the market locate those shares? The absolute no FTDs to me is super odd. Now, we've already talked about this because by understanding basic knowledge, by having basic common sense, you'll realize how ridiculous this is. Firstly, we're not seeing any locates of these shares. Now, that itself, we've already talked about it, is because they're using other ways. The very fact we're not seeing FTDs is something that's also ridiculous. But the biggest thing here, and once again, is a image that they're trying to create. The fact is entirely untrue, but yet they're trying to paint this image, is that the short interest is going down. Now, normally, when short interest is going down, that's because the short shares have been covered, aka there's buying in the market. So if we are seeing the short interest going down, if we are seeing the very short selling that has took AMC from $5, from $6, from $10, from $100, from all the way from $380 down to $2. If we're seeing that short interest dropping, meaning that those shorts have been covered, we should be seeing AMC go up. Yet we're not. Yet the reason why AMC goes up is coincidentally when Nvidia and all of these big collateral stocks are going down. So we know the real reason what's happening. We also know that the short interest is not going down, and we know what these articles are being given out. You can see, wasn't it a stellar box office weekend? Didn't we just record the highest weekly attendance for 2025? News ain't even matching what those frauds are doing daily. And so we've already said, we're seeing good news on AMC. The news that we saw last week that supposedly allowed AMC to increase, we're seeing it this week, but better, yet we're not seeing AMC go up. And this is really just to say how market fundamentals really don't apply when it comes to AMC. The market makers who are manipulating the price for their own benefits are the ones that have a say. And this is what we're looking at. And you can even see how ridiculous this is. Nothing like excellent news to start the morning with and see your company's stock price go up. But wait, it's AMC, so it will actually go down good news. Because if you go on platforms, whether it's Weibo or any others that shows the news, you can see here, AMC news, positive, positive. So these were the latest news for AMC that were all positive, talking about reporting highest attended week. Now, I've already said this multiple times. Last week, we also saw the highest attended before the record was broken this week. And the fact that news had effect on AMC last week and not this week should already show you what's going on. And so this is once again really just to highlight how these news don't actually matter. What matters is the weaknesses that these short sellers are showing. And furthermore, you have to realize that this Q4 is looking to be extremely good for AMC. AMC, let's beat it. Gonna have some wicked / animal legs, Avatar, SpongeBob, Marty Spring, and plenty of others. Don't sleep on Jujutsu Kaisen either for the anime fans, where if you take a look at the comparison of where we're going to be, we're looking at it to be very, very good. And the reason why I say this is already we talked about this. Anime movie films definitely has had an impact because we've seen how well it's done and what it had shown to the others with the potential it has is why we're seeing companies like Netflix wanting to collaborate with us because they realize how well it's doing. But you can see how well the box office is going to be doing this year. And remember, year by year, AMC has made the infrastructure better, meaning if we take a look at the comparisons, the cumulative gross for 2024 was 986 million. And the cumulative growth for 2019 is 1.1 billion. What we have to realize is that, or if we make a better comparison for 2018 of 1 billion, what we have to realize is that AMC with a lesser box office than 2018 is actually more efficient in making money. AMC, Adam Aaron has already said this multiple times. They are able to make more money with the same box office year by year because of how efficient the box office, because of how efficient their market structure is right now. And so the fact that we're not only are we not seeing the box office going down or staying the same, but actually going up whilst having an efficient market structure of how the market infrastructure is at AMC, you should realize how well AMC is going to do. And Adam Aaron also said this, I had a great honor to attend the world premiere tonight in Los Angeles of Avatar Fire and Ash, which opens December 19th, which he quotes to be the biggest movie of 2025. So if you think that the box office is stopping here, you can guess again, because we have already seen how well Zootopia 2 has done, but Avatar is very likely to be even better. And so that's just adding fuel onto this box office that we're already seeing doing well. And at a time like this, where AMC is able to really show their true capacity, to show their true potential, I think that this is absolutely brilliant news. Another thing, the GameStop warrants and bonds suggest fair value for the underlying is at minimum in the high 20s and low 30s. And yes, with theta. But that's what institutions willingly buying those products. That tells the whole story. GME is simply deep value at these levels. The Burry calculations puts the business between $42 to $95 per share. That also screams deep value at these levels. Now, we've already talked about this. A big reason for why we're seeing why AMC and GME going up, why we're seeing multiple institutions, multiple big investors buying into AMC and GME, is because they realize how much value there is. We've already said this multiple times. AMC is in an industry that is recession proof, or the most recession proof. And the fact that AMC is the most undervalued within that institution, within that industry, it's what's appealing to these guys. And so their whole job right now, their whole goal is that they want to buy up as many shares as they can without allowing retail to profit. Is why we constantly see these articles telling retail to sell. You can see, despite what we've said about the underlying value, despite what we've said with how these people are buying, you can see what they're doing in the meantime to try and persuade retail investors to leave. 1.2 million GME shares borrowed right after 2 large block trades. And so this is what we're looking at as well. Shares will return right up when the overnight DTCC net settlement window closed. So this is what we're looking at with the constant settles, with the constant resets, but it really just shows the demand for these shares. If AMC, if GME, if they're a failing company with no one looking at, ask yourself, why is there a constant need to locate and settle these shares if they are even settling? But why are they looking for these shares? Another thing, somebody just slapped 455k or 485k on the GME $25 calls like they were ordering lunch. So we're seeing more bullish premium. We're seeing more bullish incentives for GME as well. We've already known this. We've already known how people are viewing it as opportunities. We've said this with AMC. We've said this with GME. These are just data that further concludes of what we're saying. Now, here's the worrying part. This is the reason why they're buying into AMC, why they're buying into GME. Because hedge funds are getting margin called. When the Nvidia and other AI stocks drop in value, the collateral drops in value. This is something we've talked about. And this is causing prime brokers like JP Morgan and Bank of America to be disliking what's happening. So they asked the Fed to cover difference in collateral drop. This is why we take a look at the repo constantly. Firstly, it's because we've said, the reason why we see AMC going up isn't because of these fundamental news. Yes, normally when a stock receives good fundamental news, it should go up in price. But we know that doesn't apply for AMC. However, we know that when AMC goes up, coincidentally, it's also when Nvidia goes down. And that's because their collateral is failing. And you can take a look at it as well. Nvidia went up in value and AMC went down in value today, despite the fact we had good news for AMC. Last week, Nvidia went down and AMC went up. So you can really see the correlation between the two. And so this is why we've said about the collateral drops. And if you take a look at the reverse repo, 5.6 billion, like I've said, nothing to be worried about. It is not a stressful thing. It is not a rush. That is not at zero. The very fact we are seeing it still here, the very fact we are seeing these guys still in need of money is indications that there is a liquidity stress problem. And that itself is already the indication of what's going on. This as well, banking crisis. Ladies and gentlemen, I present you to another $9 billion in payouts. And so this is what we've said with the fact that they are in need of money constantly. Every single day, we are seeing money being injected into the system. Now, if they're doing so well, if they're extremely healthy, if they're managing their risk correctly, if they're managing their exposure correctly, and they're not in need of money, why would they need the repo? Why would they need the Fed to inject money? And this is why I've said cash collateral squeeze into the financial rate spikes above Fed ceiling, which forces the fire sales of treasuries. And it's one of the big things of why we've said with the collaterals failing, with the forced calling, with the forced margin calls, the forced recall of shares, all of these things that allows AMC and GME to squeeze. You can even see Fed just injected another 13.5 billion. Like I've said, we've shown so many data indications of what's going on. And if you wanted more indications of worrying things, layoffs surge 140%. 7 red flag signals deepening US economic crisis, where job cuts are hitting every quarter or every corner of the economy. So we looked at how banks are facing a problem. We're looking at how shorts are over leveraged. We're now seeing mass layoffs happening. Now, of course, I don't wish for layoffs for any of my viewers or anyone in general, unless it's these guys who are manipulating the market. But the very fact we are seeing it is highlighting what's happening within the market. Now that the stress is visible, all the ignored details suddenly matter. Who holds the risk? What's the real value of the collaterals? How many similar deals are out there? And this is what we have all been saying. So guys, if you're an ape and you've known this the whole time, pat yourself on the back, because what we have been saying for the last 4 or 5 years has always been there. It's just that no one wanted to bring it up. And now suddenly, as we're seeing people bringing it up, everyone's like, oh my God, you're a genius. You've seen this happening. How could we ever foresee this? But this is something that we have seen for the longest time. It's just that now we're finally starting the cracks to happen. The Bank of England warns of growing risk from hedge fund basis trades, where hedge funds are borrowing a record $100 billion from banks and using UK gilts as collaterals. Once again, keyword on collateral. But you can see what we've said. These guys are not in a good position. If they're making so much profit, if their position are doing so well, they firstly wouldn't be needing to borrow this money. But if we move on from that, if they're borrowing this money and they're doing well, the banks wouldn't be worried. However, what we are seeing is the worrying that's coming from banks. As always, this is financial advice, so do take our Instagram yourself. Make sure you do your own due diligence and research, and I'll catch you guys next time.